Hello everyone, today we are going to talk about the collapse of Lehman Brothers. I'm Anchor Amy.
I'm Michelle.
And I'm Wendy. On September 15 in 2008, Lehman Brothers filed for bankruptcy. First, let's talking about Lehman Brothers.
Lehman Brothers Holdings Inc. is an overseas financial company and one of the largest investment banks in the United States. It began operations in 1850 and focused on market research, security trading, investment management, and other activities. In 2008, this banking firm was even named to Fortune magazine's Global 500 list. In the early 2000s, the real estate sector in the United States was thriving. Lehman Brothers was the largest distributor of securitization products at the time, selling and investing in mortgage-backed securities, collateralized debt obligations, and other securitization products. One of the main reasons it collapsed was because of this. On September 15, 2008, Lehman Brothers declared bankruptcy with $613 billion in liabilities, becoming the largest bankruptcy in American history.
Lehman Brothers bankruptcy can be traced back to America's subprime mortgage. This is a housing loan offered to those with a poor credit history. Because of the high risk, the company may be able to obtain a higher interest in return. They provide the products bundled with other better loans. Subprime mortgages reached its peak between 2004 and 2006. Lehman Brothers gains lots of profit, but the crisis is already taking place. Because people with poor credit may get a mortgage, house values in the United States began to rise dramatically, and a large number of investors flocked into the market. The housing bubble began to default in 2007, and market prices plummeted rapidly, resulting in the subprime mortgage crisis. Many investors sold their properties due to inability to repay their obligations. Regardless of how bad the market got, the Lehman Brothers bought a lot of business and residential mortgages in contrast, making serious mistakes result in bankruptcy. Another reason for Lehman Brothers' collapse was one of its financial commodities, credit default swaps, which transfer the risk of the seller's non-payment to the buyer, leading buyers to believe that bonds could be purchased indefinitely without knowing whether the loans could be recovered. This commodity involves up to $800 billion, which also led to the failure of the Lehman Brothers.
The impact of the bankruptcy of Lehman Brothers is not only limited to the company itself, but also affects the entire financial market and the real economy. Because Lehman Brothers has close business and creditors' rights with other financial institutions, its collapse has caused other banks, funds, insurance companies, etc., to face huge losses. On the one hand, the chain effect weakens the capital and credit of all financial institutions, but also affects the confidence and demand of consumers and enterprises, making the whole economy in recession.
The 2008 Lehman Brothers bankruptcy was a pivotal moment in the U.S. financial crisis, causing upheaval and recession in the global financial markets. After the incident, the initial attitude of the U.S. government was not to provide direct assistance, but rather to bankrupt and liquidate
Lehman Brothers. The decision resulted in an increase in market uncertainty and panic. The U.S. government then implemented a series of emergency measures to stabilize the financial markets. These include authorizing the use of $700 billion in funds to bail out financial institutions through the Emergency Economic Stabilization Act. Additionally, they established a dedicated asset manager to acquire distressed assets, which helped alleviate market pressure. The government also lowered interest rates and implemented quantitative easing to increase liquidity in the financial markets. In addition, the government has increased financial regulation and transparency through the Dodd-Frank Act to prevent similar crises from happening again. This measure aims to stabilize financial markets, restore market confidence, and prevent the further spread of the financial crisis to the broader economy.